Why do some traders earn millions while others lose again and again? The answer may lie not in strategy, but in mindset. Jesse Livermore is a legendary speculator who started to trade at the beginning of the 20th century, without terminals, without charts, without the internet, only with an understanding of the market and crowd psychology. He didn't just make money. He predicted the crash of 1929 and made over $100 million on it. And his principles still work today. We'll learn how he entered the market, why he waited for weeks without trades, and how his system helps to trade with profit even now, 100 years later. And at the end of the video, I will show one trick from his strategy, which can be applied today, even without complicated models. It's simple if you know where to look. Before we get to the strategy itself, let's quickly review who Jesse Livermore is, and why his method is noteworthy even today. He started at the bottom as a teenager in a brokerage office, rewriting quotes on a blackboard. Already at the age of 15, he made his first profitable trade, and by 30, he had become one of the most recognizable speculators on Wall Street. But his main advantage was not in speed or intuition, but in understanding the psychology of the crowd. He knew that emotions move the market, and he knew how to wait for the crowd to make a mistake, and then enter with full confidence. He said, "Big money is not made by buying or selling. It's about waiting." This phrase became the basis of his approach. Now let's analyze what his strategy was based on and why it works so accurately to this day. To understand how Livermore traded, it is important to discard the idea of frequent trades and searching for entry points every day. His strategy was about something else entirely, trend trading. Livermore only entered when the market had already shown direction. He didn't guess a reversal. He waited for momentum, and only then looked for an entry point. The principle was simple: never argue with the market. Momentum selection. He used to say, entry is not the main thing. It's the timing of the entry that matters. Livermore could wait days or even weeks until he got the confirmation he needed. He would enter when most people were already in and catch the major move, pyramiding. That's one of the key tricks. He didn't enter the entire volume at once. If the position was going in plus, he added to it, or pyramided, but only after the market confirmed his direction. This allowed him to make money on the movement in several stages, reducing risks. Stop loss. Livermore had no illusions. He didn't chase losing trades. Stop loss was mandatory, and he put it in without question. The key was to preserve capital for the next opportunity. It was these principles that made his approach timeless. And now we'll look at what made his style truly unique, especially against the background of most traders. The main difference between Livermore and most traders is that he didn't try to predict the market. He waited for the market to show him what it was going to do, and only after that he made a decision. Instead of catching the bottom or trying to enter before everyone else, he patiently watched how the price broke important levels, how the impulse was formed. He didn't need to be first. He needed to be right. He was saying, let the market confirm where it's going first. I'm in no hurry. Unlike most, he didn't look for opportunities every day. Most of the time, he just watched, analyzing, waiting, crossing off days with no setups. But when the market signaled, he entered with confidence, with calculation, and capitalized on the big move, not short-term volatility. He wasn't afraid to miss a small pullback, because his goal was not to take the very beginning, but to enter the trend when it was already confirmed, and to get out of it, not by emotions, but by a clear sign of weakening. Livermore traded like a hunter, quietly, patiently, with cold calculation. And it is this mindset, the ability to wait, analyze, ignore noise, and act only on facts, that makes his style not just unique, but relevant even today. Now, let's apply these principles to a chart and see what a typical trade might look like according to Jesse Livermore's logic. Suppose that the market has been in consolidation for several days. No strong impulses, volumes are low. The price is looking for direction. Livermore didn't trade at times like that. He just waited, because he knew that sooner or later there would be a movement, and it would show who was in charge of the market. And the next day, a strong upward impulse appears. The price breaks an important level, grows with volume, closes confidently. Most traders are in. Livermore isn't. He's watching. The next day, the price pulls back. Not a sharp pullback, but a controlled one. This is the moment he's been waiting for. Confirmation that the trend is not random. This is where he starts to enter the first part of the position. If the movement continues, he adds. In his words, I buy when the market shows strength, and I add when it confirms that strength. He never pyramided to a position in a losing trade, only when the market was going his way, and the stop was always placed where it could not be seen by the crowd, behind a logical extremum, but with enough distance not to be triggered by the noise. This is how his trading looked like. First waiting, then confirmation, and only then entry. No rush, but with calculation. Now let's see how to adapt this approach to modern trading, taking into account our tools and realities. Today we have terminals, charts, indicators, everything that Livermore didn't have. But the essence of trading has not changed. Patience, confirmation, pyramiding, and filtering are the 4 pillars that still work today. Don't try to get in on every pullback. Livermore waited for the moment when the market clearly showed direction. He didn't guess. He reacted. And he didn't enter on the first impulse. He waited for a breakout and a return to the level to confirm that the trend was real. If the trade was in the plus side, he pyramided to it. But he never added to a losing position. And most importantly, he could skip dozens of situations before finding his own, because he knew that in trading you are paid for accuracy, not frequency. As a result, his style is not just an entry technique, it's a systematic approach where every detail is important, from the market phase to the moment of trade. And that's what makes his principles still relevant today. As Jesse Livermore said, the main problem of a trader is the trader himself. Emotions, rush, chaotic entries, all this destroys even a good strategy. And if you realize that you can't handle yourself yet, there is a solution that can support you. It is the OWL indicator. OWL shows clear signals for entering a trade without guesswork and overthinking. It doesn't require analyzing dozens of indicators. You just wait for the signal to appear and enter. That's it. This approach helps to develop discipline, gets rid of emotional entries, and teaches you to trade systematically. Instead of guessing, you start to follow the logic built into the tool. This is especially useful if you are just building your approach to the market and want to minimize mistakes. You can find the link to the indicator in the description below the video. Livermore's strategy is not just a set of rules. It's a way of thinking. It's the ability not to trade when there is no signal and to act decisively when everything comes together. He proved that to make money, you don't need to guess the market. You need to understand its behavior, wait for the moment of strength, and be ready. You can take his principles and build them into any modern strategy. Start waiting, filtering, entering consciously. And with this, you will be different from the majority. And if this video helped you look at trading differently, give it a like, subscribe to the channel, and turn on notifications.